All right, guys, what's up? Alec back with another stock market investing video. And look at how green our profile is right now, guys. We have 13.4 and we're up 2.6% today, up $347. And at one point, we were even down in the day of about $27. And then the stock market is just rallying like crazy right now, guys. So it's an exciting time to be in the stock market. If you guys aren't in the stock market and sitting on the sidelines, you might want to consider investing in the market. A lot of people are up 10, 7% in the week, 16% in the month, so on and so forth too. Now we have some great options right here. We're up 121% on an Intel call just today. And if you want to see for yourself exactly what I'm buying and selling, then go ahead and reach out to me in the DMs. I do have a program. It is a paid program that has helped a lot of people in a massive way. And if you guys ever want to see some references, go to my profile, just like we're on my profile right now. And if you click on client success, this one right here, you can actually read through these and see some real clients and what successes they've had and what they say about the program too. Let's get right into the video though. Today we're going to be talking about a stock that can easily 2 times your money, and we're going to be doing a deep dive into this stock and the reasons why I think that you can 2 times your money. And then we're going to be comparing it to one of its biggest competitors and seeing which one you should probably go with, if not both. But before we get into that, look at the stock market right now. Facebook up 3%, Tesla up 7%. We have JWN up another 5%. We're up about 63% plus on them now. Intel almost up 2.4%. TPR up 5%. SPY-D, which is going to be an ETF, is even up 3%. Revolve up 5%. Cheesecake Factory is up 7%. Bank of America is up 5% almost. We have United Airlines up 9%, American Airlines up 8%. So you want to be definitely cautious right now. Whenever we see big gains like this, you can see a little bit of a pullback easily. And Wells Fargo up 7%, 8%. And the stock we're going to be talking about today, Wynn Resorts, is up 7%, guys. So what is Wynn Resorts? Wynn is going to be a high-class hotel resort in Las Vegas, Boston, and China. Currently, their stock sits at $102 a share, and I was buying them at an average cost of $86 a share, and even a lot less. If you check out my Webull video, I was buying them at like $40 or $50 a share. Now, with that being said, you can see they have a market cap of $11 billion. So the market cap's always important when you're looking at a company because that's how much you're basically buying the company for. You have to think to yourself, is Wynn Resorts worth $10 to $11 billion? And a big point of this video I want to mention is just if you wanted to build the resorts they have in Las Vegas, that would be about $7 billion for the land and the construction cost and the labor and everything to build those properties. And it would be another $3 billion on the Boston properties. So that's already up to $11 billion. Not even to mention it would cost about $10 billion in the other structured resorts they have in China. Because don't forget, they also have nice resorts where the high-end people go in China for the Wynn Resorts. So just if you want to build the structures in Vegas and Boston alone, it's almost worth more than the entire companies as a whole, which is something you definitely have to think about when you're looking at the valuation of a company. Now, one thing that can really affect this stock, and that's why we're really talking about it today, is the shutdown. So it seems like right now, a lot of these companies like United Airlines, Wynn, that are up like 8, 7% today, it's a lot of the travel stocks that are up significantly today, even though the numbers and the cases are just rising and rising. These stocks are rallying right now because of the vaccine, on the hopes on the vaccine. So if another shutdown takes place, which we already saw, Los Angeles actually closed even outdoor restaurants, which is not good for companies like Cheesecake and some of the other travels because malls could be next, hotels can be next, because a lot of other companies can actually be next. In my opinion, we can see travel getting hit big, so you definitely want to have this one on your list. Visitors to Vegas, which is one of their biggest properties, have been cut down drastically in the 8 months. And same with the stock price in the last 8 months when stock price has actually been cut down. Right now, what's going on is the worst case scenario for travel stocks is the shutdowns and people afraid to fly and nobody traveling. And the good thing is bad times don't last forever. So with bad times not lasting forever, with that being said, 2021 is going to be a year of travel, and I think it's going to be picking up right around Q4, Q3, Q4. We can see numbers start rising back to normal again, and then 2022 will officially be back to normal. So you have to be plotting right now for plays in 2021 and 2022 before it's too late. So remember, bad times don't last forever. You want to buy on dips, and 2021 Q3 and 4 I think will be huge for a lot of travel stocks, not just hotels and Wynn Resorts, but air travel in general. And 2022 we can see a big return. Now you might be asking what plays a big part in the stock going back up? What will get Wynn stock back to normal? There's a few things. A big thing is going to be visitation trends. So if we see more people traveling and taking airlines and more people visiting Vegas, shutdowns dropping. So if we see the cases dropping, vaccines working, vaccines getting FDA approved will be a huge thing for all travel stocks. And travel stocks will become the thing to make money on. So you might see a lot of videos coming out with people talking about travel stocks, buy now. I'm trying to make this video a little bit ahead of time because once we see visitation trends going up, shutdown stopping, vaccinations coming, FDA approval, we'll definitely see airlines going back to normal and a lot of other travels, restaurants, and other big companies like that. Now, the good thing about Wynn Resorts is they go after a really bougie type of client, and they can easily mark the room rates up really expensive. They can mark the restaurant bills up. You know, the people that go to Wynn, they're targeting people that can actually drop like $1,000, $2,000 on a dinner at a restaurant like it's nothing. And they can also mark like club fees up, shopping. You know, a lot of different retailers actually pay big bucks to be in the Wynn Resorts. And they also have huge gamblers, people that go in with like $10,000 budgets, $100,000 budgets, and some people even have $1 million budgets that are going to the Wynn hotels. Now, one quick thing I do want to touch before we get into the financials and compare it with a competitor is it's all about timing with Wynn. So if you can buy this one under $110, ideally you would want to be buying under $100, honestly. But I think that if you buy this one under $110 and you can easily cash out over $150, $170, even $200, I can see this one getting up to. But keep in mind, Wynn is going to be a long-term play, like we talked about. You know, it's going to be coming back in 2022. So I would say that this one is going to be a 2 to 3 year play. If you are looking for about the stock price to go to 200, anywhere from 175 to 200 is super realistic for Wynn Resorts to be at. But remember, it's going to take 2 to 3 years to actually get there. Now, the good thing too about Wynn, it's actually expected by a number of analysts to have 123% revenue growth next year. So 2021, it's expected to be a revenue beast, a revenue monster, and grow by 123%, which is a huge thing to actually mention in this video. All right, so we have Wynn Resorts pulled up, ticker symbol WYNN. And if you look at their EPS, they have been missing consistently. Again, the whole thing with the travel industry got hit really hard. So, of course, they're going to be missing, but they're projected to grow revenues in 2021, like we already talked about in the video. Now, we'll go over some of these key indicators later on, too, and EPS and ROA, ROE, and all that stuff later. But the big ones you guys know I like to look at is total revenue and net income, and then the balance sheet. So with total revenue, in 2016, they grew 6%, and then 2017 was their big one. They grew 39%. And if you look at the chart in 2017, you can see that's like when they peaked was around 2017 at about, how much is this per share? About almost $200 a share. They peaked at when they just grew revenues by 39%. So remember, in 2021, they're actually projected to grow 125% by analysts. And in 2018, they grew by another 10%. They were up to $6 billion in revenue. And then 2019 was the year they started taking a hit. And then 2020 was an even bigger hit than that. So their net income is nothing spectacular, but you can see in 2017, it grew by 81%, all the way up to $500 million in net income, which is really good for their earnings. Now, if you look at their balance sheet, it is not the best thing in the world, but if you go in and go into their actual balance sheet instead of just looking at their total assets and liabilities, what you'll see is they're growing cash and cash equivalents by 112% year over year. So now they have $3.5 billion in cash and cash equivalents. Now, if you scroll down, their long-term debt is a little bit frightening. They have $12 billion in long-term debt, and it's up 33% year over year. But the good thing is that with the debt only up 33%, the cash and cash equivalents is up 112% to $3 billion. Now, if we pull up one of their biggest competitors, like MGM Resorts, for example, you can see their EPS they're missing EPS. It's not good. They're not even profitable, MGM. But the good thing about them is they have been growing revenue almost by double digits, even in 2019. So they are doing more revenue than Wynn Resorts, but look at their net income. So in 2015, they actually lost $1 billion. And then in 2016, they shot up 218% and made $1 billion. So they're very inconsistent. It seems like they fluctuate. And then in 2017, they lost 44% of their revenues. 2018, they lost 15%. And then 2019, look what happened again. They gained almost 280%, $2.2 billion in net income, which is actually really good. Remember, Wynn was doing like $500 million, and they're doing $2.2 billion, but they're very inconsistent. And if you look at the balance sheet, it's almost a little bit better than Wynn's too. You can kind of see that the assets to liabilities aren't as close together as they are with Wynn. And if you go in and look at their cash and cash equivalents, they have $4.5 billion in cash and cash equivalents, which is up 272% year over year. And then if you scroll down and if you look at their long-term debt, it's actually down 22% year over year to $11 billion, which is a really important thing to look at. So MGM might be another one that you want to be buying alongside Wynn Resorts. Now, MGM is nearly up 9% today also, and let's look at their PE ratio is 9 PE. So that's really good. Means it's a really good time to buy. Their market cap is $14 billion, so it's right around where Wynn's is. But let's look at their graph. So it looks like they're almost already up to their all-time high in 2018. Remember, it was 37, which $28 to 37. So with that being said, them almost being at their 2018 high, obviously they're not there yet, but they've almost nearly recovered from the whole shutdown. Where Wynn, on the other hand, if we pull up their chart, so here we have Wynn, and they have not nearly recovered yet. So remember, they were up almost $200 at one point. So this stock still has capabilities to be a 2-time stock, is why it's the main stock on the video. And we're not talking about MGM, is because it has a better growth opportunity with Wynn. See, MGM is still a great company that you might want to get in, but you won't see as explosive growth. Sure, you might see 15, 20%, but with Wynn, I think in the next 2 to 3 years, we can see something like 50 to 100% gains. So I think there's a little bit more meat on the bone with Wynn, and there's still some growth opportunities with Wynn available, even if this one can easily realistically get to 151, right where it was before the whole shutdown and all these stuff started happening. And once we see some of the stuff that we talked about in the video, visitors increasing, revenues increasing, Wynn Resorts doing well again, more people staying there, we can easily see this one back to about a $200 high. But $150 is totally reasonable. And again, if we look at MGM, you'll actually see that, the best case scenario with them is maybe going to $30, which is super risky, maybe even $35, because I think they can have another correction. So if you want to put MGM on your list, I would put them right around like 22 $22, $24. And if you can get in at that one, even if you can get in at $21, if we see another pandemic and some big things happening with travel stocks where they're going down a lot again, and the vaccine rally stops and stuff starts going down, you might want to have MGM on your list at right around $22, $21, $23 a share and pick up some of that too. So I hope you guys did like this video. It wanted to go in a little bit more of a deep dive because I often go over a lot of stocks in one video, but I don't dive too much into them, the reasons why I like them. So this video, I wanted to dive in a little bit more. If you guys did like this format, go ahead and smack a thumbs up on the video. Lets me know that you did enjoy it, and it really helps me out because it recommends this video to other people as well. So it gets the word out, which really goes a long way. And if you guys want your profile looking a little bit more like mine, go ahead and send me a DM in Instagram and I will respond. I have a few more spots available. I also have my own website if you guys want to check that out. Some of the packages are on there and you can get lifetime access to all the stocks I'm buying, I'm selling, so you can see for the lifetime exactly what I'm doing, and it will dramatically help you out. Again, look at those client success stories. They really go a long way with helping you make a decision to see if this is for you. So like the video, share it with a friend, comment your thoughts below if you're going to be buying Win or if you're going to be buying MGM. And until next time, guys, I'll see you in the next video. Remember, don't time the market, buy the market. Peace.